I start with what we are looking in the entrepreneurs and what type of a startup we look into to invest in, and the stage of the startup raise, going through that race. How does it work? So what we are focusing to invest, generally speaking, what we are seeing as a trend of a market is that very narrow, small entrepreneurs that they are coming from Ivy Leagues. They get funded because of their contacts. And in my philosophy of investing, we tried, at least through myself and my firm's philosophy, we tried to be slightly different and look at the ecosystem of the startup and entrepreneurship differently as well. I go through why, and there are entrepreneurs that they are very serious and they are coming with a huge experience in the field, and they're not coming from an Ivy League, but they know how to run the business. And what we learned in the venture capital world is that your revenue matters. The perception that you are selling to the venture capital matters in your raise as well. So you need to have a quantitative background to understand your product, to understand generating your revenue and scaling a company. But in the meantime, you need to understand the game of raising funds as well. So these two goes hands to hands. And we see certain entrepreneurs that they have a beautiful product, and unfortunately, they are not the best raisers. Why? Because, you know, they don't have the soft skills in order to understand what the investors need, in order to sell the product in a way that they are looking to invest in. So, and what we are looking and what we that generally speaking was a trend, that was a stage of a pre-seed that normally, you know, kind of an MVP and minimum viable product was coming out, and people, they were raising money through accelerators and, you know, angel investors and some sort of institutions in the pre-seed, round. However, since 2020, what we are seeing, the trend is changing, because the volatility of a market went up, and people, they were more skeptical around the investing in startup because of the failure of the startups was so high. We see that this movement of pre-seed, seed stage, and Series A is mixing up together. We are seeing the companies in series, in seed stage, for instance, that already have $20,000, $10,000 MRR. And that makes it interesting. And the expectation of a caliber of the market in terms of investing, it went up as well. What we're seeing in Series A, that normally, for instance, in 2018 to 2000, up to 2020, was like, generally speaking, around the same MRR. That's 1.5 during revenue. Seeing this changing, that they're producing higher. But is that enough for, you know, Series A, that we wanted to raise $15 million, for instance? It depends. The questions around the founders, you know, perception of what you are selling always is that, yes, you are having a 5 million, 7 million ARR, but what is the next out like? How you going to create a unicorn that, 3 years after Series A, you can create the $10 billion companies into the roadmap. And all of this, the art of how you talk to investors, what projection you are selling it to them, in order to de-riskify that when I am investing in a company, in a startup, make sure that the probability of a success is going up. And it's about the projection of a growth. Even if the growth at the moment is 30% on a monthly growth I am having, I need to assure the investors that in the next 2 to 3 years, I'm able to make a double. And I need to create the 10x, ARR for the investor to create the confidence in the investor to invest in me. Coming from a strategy perspective and finance perspective, that what is my financial model looks like and how I interpret numbers to the reality of the investors. And these two comes always together. You never can provide only the numbers to the investor and tell them that, this is my financial model and we're gonna create this amazing revenue stream and sustain it in the next 3 to 4 years. You always need to tell the story, and the story of how you're gonna get there, the amount that you are raising, where I'm going to deploy that, and why I think that I am able to generate the revenue that I am selling it to the investors. So the art of knowing your number and the art of selling your number at the same time is important. And for the young entrepreneurs that you see a lot of them coming out of these, and they don't know anything about fundraising and they don't know anything about the game of this industry, my suggestion is that know your number very well, be courageous, be bold. Everybody knows, as Gaurav mentioned and Dr. Amir mentioned, is that data is part of our daily life in the next 10 to 20 years. And everything that we are selling also related to. So whatever you wanted to do is just lay it out in a way that you are talking to. I always say that investors are very impatient. They are like 16 years old boys. They get bored very soon. So you need to be very precise, very short, and very on what exactly you want to achieve in you are bringing on. That with enough data, and then also sell the projection of what you are going to create. It's always good to talk about why do you think that this solution going to be $1 billion company and how you're going to achieve that.